Hey everybody, Boris. Welcome to the weekly technicals for the majors for Euro dollar, dollar yen, pound dollar for August 28th to September 1, 2017. The big story in front of us, of course, is this massive breakout in the Euro dollar that we saw on Friday post Jackson Hole. It's kind of an interesting day because it was sort of a complete reversal of the conventional market expectations, which is that Janet Yellen was going to maintain her hawkish tone and Mario Draghi was actually going to sort of provide a more muted, dovish tone to maintain euro dollar lower. The exact opposite of those things happened. Janet Yellen essentially completely ignored any type of forward guidance and just spoke a lot about regulation. And in many ways, I think the market saw that as a big criticism of the Trump administration, essentially her burning her own bridges for any possible renomination for the Fed chair. Perhaps so, but in either case, it was just sort of a non-dollar supportive speech. It wasn't a dollar negative speech, it was just simply a non-dollar supportive speech at a time when sentiment against the dollar was just so massively negative. And conversely, in came in Mario Draghi and essentially talked about how well things are doing in the Eurozone. Now, he didn't say anything about tapering QE, but just the implication that he felt the conditions in the Eurozone have really improved suggests that they really are on pace to perhaps lift or begin to taper QE starting October, which is a very bullish development. And this just, all of it consumed the dollar, broke the euro to fresh 3-year highs, higher than we've seen it since 2015, and now really puts it very squarely into the 120 zone in view. The breakout was significant on Friday. We may have some consolidation and churn, but this 120 level, just from a technical point of view, is going to be just like red meat to hunting dogs for euro bulls, and certainly going to create an opportunity, I think, as the market goes forward. Let's take a look at the levels first, then we'll take a look at the calendar, and then I'll take a look at the charts. So the levels right now in the euro, clearly this 117 now becomes support. 120 is the very magnetic level that everybody's looking for. Dollar yen and pound dollar essentially remain the same at their levels. This 108.50 is still very critical support for dollar yen. Don't forget that amidst all of this negative dollar vibes, we're still been able to hold the 108.50 consistently, and that is about the only thing that provides any support for dollar bulls. Aside from that, pound has just been the relative weakness trade as it continues to be. Although, and I think this is kind of interesting, I think as we approach next week, we may see that pound relative weakness trade come to an end, and your pound may be actually an interesting short as we go into the end of the week. But let's take a look at the calendar first, then we'll take a look at the charts as far as the majors go. So calendar is very tepid front of the week, not really much going on. It's the last week of August. Almost everybody is on vacation. Very little economic flow coming out of the U.S. We don't have anything, advanced goods trade sale, consumer confidence on Tuesday. Nothing till Wednesday when we have the ADP numbers, which is going to give us, of course, a clue to how well the non-farm payrolls, which are going to be very critical to any kind of dollar support at this point. And then after that, Thursday, we'll have some personal spending, personal spending and income numbers. Those are looking to be bullish, and that could be also support for the dollar. And finally, of course, everything culminates on Friday with the non-farm payrolls, which is really going to be an absolutely key tell to whether the dollar can hold these levels and provide any forward momentum for dollar yen. On the UK side, we just have the UK PMI coming up on Friday, and European side really just a smattering of unimportant data. Employment, nothing on the European side that I think is of any interest, perhaps except maybe the CPI data. The one key thing, of course, that the ECB has been beating down on is the fact that we have low inflation, and if we have Eurozone CPI that comes in cooler than expected, that could provide a little bit of a downdraft to the euro. That's about the only event risk that we have in front of it. Now, when you look at the charts here, the reason why euro just looks so gung-ho towards 20 is you see this massive breakout on Friday. And now, if we go back, if I go towards the weekly charts, you can see that, and let me just zoom out here for just a bit. You can see it really doesn't, it doesn't come until 2015, but this whole area this 120, 119 gap, it's actually a gap on the weeklies, they would get filled, is just very tempting for euro dollars to run. Once we do run it, that former support becomes resistance, I think, and I think it's going to be much harder for euro to get much past 120, as it's going to encounter pretty serious long-term resistance. But having now run through, and you can see on this chart, it's just made a very, very long-term, tremendous amount of consolidative W bottom. It's certainly on a long-term basis an up trade, an upward trend, because euro, just on, if you look at the weeklies, looks incredibly powerful. This is a very, very long-term base with a move possibly straight up towards 125, 130. So hard to really fade this as a long-term trader, but on a short-term basis, I think the 120 kind of caps out and creates a little bit of a retrace move. 117 still remains the key support for the euro as we stay here at these levels. Now, looking at the dollar yen, these are the weekly charts. Again, the only thing that supports dollar yen here, if you're a dollar yen bull, is the fact that we just simply haven't been able to crack the 108, 108.50 level. As long as 108 holds, you have just a small ray of hope that dollar yen has a chance to recover. We do have positive U.S. data. One of the interesting things, sort of, I think that the market or that analysis has kind of missed in many ways, is the fact that U.S. data has been super positive, but the chaos and the turmoil on the political side has really taken a toll on the U.S. dollar. And in many ways, it's really going to be interesting as we come into September if there's going to be more discipline and more organization. In other words, if the conversation in September turns to tax reform, economic issues, and things that the markets are really, really hopeful about, that should provide a very interesting and decent boost to the U.S. dollar. If we're still essentially in this free-for-all World Wrestling Federation view of political life, it's very difficult to imagine the dollar getting any kind of a support move here, even if we do have relatively decent economic data, because the market just simply is viewing the chaos in Washington, D.C. as a super dollar negative trade. And until that gets, that story and narrative gets changed, hard to see a move higher. But we do have the economic movement catalyst here this week, and it's possible for us to certainly recover the 110 level. For now, I think the 108, 110 is the key zone for dollar yen. A break of the 108 is very, very negative. A break of the 110s could provide the kind of signal that would suggest maybe a longer-term dollar recovery as we go forward. And then last but not least, here's cable. And cable has been a relative weakness trade for quite a long time, but we do have a little bit of positive news here with UK PMI, which we're projecting to be better than expected. Cable really is still a quagmire of the Brexit story. I don't know if there isn't much really Brexit news that's going to be coming out here. And if cable sort of finds a little bit of support here, this 120, with cable, just as with dollar yen, 108 is just a critical level. With cable, the 127 is the really critical level. A break here really opens up a much steeper, longer move towards 129. We'll take a look at the crosses a little bit later in the videos. But having been a very, very good short for last week, I think it may finally be reaching its end, and it could be an interesting time to flip the euro pound trade to the other side. We'll take a look at the charts in our crosses section and see how it trades out. So the relative weakness story of the pound may be coming to an end this week, just on a mean reversion basis. But as far as the majors go, I think the central story of the week is going to be euro dollar to 120, and does the dollar yen survive the 108 support? And is there enough economic data positiveness? Is there enough positive news out of the U.S. to kind of push us back towards the 110 as we go forward? So I'll be watching those levels very carefully. Wish you guys the best luck, the best of trading. Boris, over and out.